As more countries in the world are going into lockdown in an attempt to lower the COVID-19 curve, a lot of businesses are directly impacted. Supply chains are cut while businesses have to shut their doors. Many individuals are also losing their jobs. With the real economy under threat, many governments have chosen the path to inject stimulus rescue plans to help the unemployed, badly affected businesses, and the drowning economy. In many cases, the stimulus money is sent directly to the individual families. As many welcome this helicopter money, we ask ourselves if this helicopter money is good for the real economy in the long run. To explore the answers to this question, let's watch this video till the very end. Before we go into the main report, here is a short report on Bitcoin's long-term price action. Now let's have a quick look at Bitcoin's medium to long-term trend. Currently, Bitcoin now is just went above $7,000, as seen in my TradingView chart. I'm now at Bitcoin on the daily chart at the standard candle. As you can see, we had a surge today to above $7,000. In fact, the price is now touching the 50-day moving average, as seen here in this orange graph here. That's the 50-day moving average. What we are waiting for now, that I hope to see, is that the price break above the 50-day moving average, and after that probably it may come down to test the 50-day moving average, then after which finds support on it, and then it will continue moving up past the 200-day moving average, this purple graph here. And once broken that, probably come back again to test it, find good support, and then go further north. If I was to put on the log chart, I have this gradual incline funnel where Bitcoin used to be before it broke down due to the market crash that was led by the COVID-19 scare. We are also hoping that the price of Bitcoin would not only pass the 200-day moving average, but also go back into the gradual incline funnel. Who knows, after finding support there at the bottom part of the funnel, it will continue moving north, hopefully up to the top part of the gradual incline funnel. Now currently Bitcoin is moving into the gradual incline phase. We hope that it will continue to stay in this gradual incline phase. Okay. So that's being bullish. However, if I was to be allowed to be a bit bearish, one point to take note is that Bitcoin currently has been touching the 50-day moving average quite a lot of times. Here on the daily chart, you see that Bitcoin has touched here once on the 7th of April, 2, 3, 4, 5, failed to break to 6, and today the 7th time. It seems to be coming down back a bit. So we don't want it to be just a fake out, but a permanent breakthrough, and then have a full candle above the 50-day, come back to rest it. Okay, so that then only can we be sure that it broke above the 50-day moving average. One thing to be concerned is that the volume, as you can see, has been declining. In fact, since the middle part of March, all the price, even though that Bitcoin has been on a clear uptrend, as you can see, it's still having the higher lows here, a slight decline here as it touched the 50-day moving average. So this is a concern. Another thing to take note is that the surges that we see, the green candles, it has been reducing. So as you can see here, we have a large surge here after the massive decline. This is about As you can see here, it's about 14%. And then another one here, which is about 17%. Here we have 12%, and here is 8%, and here the one today is about 5%. So it's clearly reducing the green candles. So this is also another concern. It is possible that the price of Bitcoin will, after multiple fails of breaking the 50-day moving average, it may see there is a chance that we will see a massive correction down to probably $5,000 over dollars, or even possibly $4,000 over dollars. But so it's something that we need to wait and see. But if at all Bitcoin finds support on breaks above the 50-day moving average, breaks above the 200-day moving average, then one of the few things that we will hope to see, besides it breaking above the funnel, is the impending golden cross, where the 50-day moving average graph cuts above the 20-day moving average. Okay, so I'll probably go very bullish at when the golden cross happens. Another important event, as you all probably know, is the Bitcoin halving that will be happening somewhere on the 12th of May this month. And when it does, that's based on this counter, it's 26 days from today. But going past the Bitcoin halving, if we are to look back into the stock to flow chart, we will see that the 10-day moving average for the stock to flow predicted price for Bitcoin, it actually goes all the way up to $88,000. Of course, the price has been following very closely to the 365-day moving average, which is this teal line here. So as the price action goes past the halving, we will see an increasing bullish pressure on Bitcoin, because the supply is cut in half. All the supply of Bitcoin that is coming out of the miners, that will be reduced dramatically. So this gives a very bullish pressure onto the markets. So I'm looking forward to the time after the halving that the price will ultimately surge above the previous all-time high of $19,000, and then it will probably that probably will be somewhere in the middle of next year, and after which then we will see massive gains past that. Okay, so that's my sharing for today. Let's move on to the cover story. It is an established fact that the United States of America possesses a debt-driven economy, but the worldwide crisis of the COVID-19 outbreak has caused the stock market to crash. To no surprise, this is causing a global economic meltdown, and this is in particular has harshly affected the global economy. Many companies in the United States now run the risk of bankruptcy, and those who are still afloat have suspended their operations, which has caused more than 6.6 million Americans losing their main sources of income. This is the largest economic downturn in United States history, and it will take years before its economy can fully recover from this negative fallout. In fact, this dire situation has forced the current government administration to pass a massive quantitative easing stimulus bill to keep the economy afloat. But this stimulus requires the Federal Reserve to print out trillions of dollars in order to bail out the entire economy. Quantitative easing is an unconventional policy that expands the open market operations of a country's central bank. In the United States, the Federal Reserve is the central bank. It is one of the most successful monetary policies in history that many nations have used to boost economic growth. The main purpose of quantitative easing is to make it easier for businesses to borrow money in order to stimulate an economy by purchasing assets to increase liquidity in the financial market. In effect, this will increase the money supply and reduces money costs. Lower capital costs mean lower interest rates and better conditions for banks to lend money. This strategy is usually implemented when a country's interest rates reach zero. This can be likened to the theoretical monetary stimulus procedure known as helicopter money. That was first introduced by American economist Milton Friedman in 1969, where he conceptualized the idea of a helicopter dropping free money in a crowd, but it actually refers to a central bank deciding to boost inflation and production in an economy that runs considerably below capacity by offering direct money transfers to people. In simpler terms, every American will soon be deposited with free money from the government in order to increase their respective expenditures to boost the economy. While this massive quantitative easing may help many jobless Americans to survive through this crisis, this action will possess serious consequences to the economy in the long run because they will end up with hyperinflation. Hyperinflation occurs when the government of a nation increases the supply of capital, and as a result, the prices of different goods in demand will increase as government continues to print more money instead of tightening the supply. When customers are aware of the situation, they will expect this inflation to continue. They buy more now to avoid subsequent higher prices. What this means for the general public is that as long as this economic downturn persists, interest rates will go into the negative zone and the surplus cash will lead to a major deflation of the US dollar, both locally and in foreign markets. The major issues that can arise from this includes importers in the nation will going out of business as the costs of foreign products skyrocket. The falling value of the local currency makes exports cheaper compared to foreign competitors, and thus the exporters receive the hard foreign currency, which increases in value as the local currency falls. Revenues from government taxes fall, which leads to problems in providing basic services in the country, and the hyperinflation is only worsened as the government prints out more money to pay its bills, even though it drills negative returns as the nominal government debt increases. And this problem is certainly not just centered in the United States alone, as many other countries worldwide that are affected by the COVID-19 outbreak have these respective governments utilizing derivatives of this stimulus package to combat the crisis. The earnings of their various equities from food, entertainment, sports, leisure, etc. have gone down dramatically. It goes without saying, this is historical level of economic disruption, and there is no telling when it will be fixed. Public health experts have stated that this crisis will keep the global economy closed, as it will take at least a few months for the infected rate to slow down. If the dollar loses any more value, very soon people might come to with an alternative currency for international trade, even as the financial system is being forced to its limits. Working with Bitcoin makes more sense than ever. It's not about whether or not the Bitcoin price will launch a counter movement, but about whether Bitcoin will secure a long-term buying power. Bitcoin is a long-term hedge because it is not subject to devaluation, nor is there any overwhelming economic debt on its system. It works just like gold, that is recognized for its anti-inflationary properties by most investors, and it traditionally outperforms in low-rate environments, and its lack of income makes it less vulnerable to drops in economic activity, though gold, nevertheless, is still susceptible to price fluctuations in the supply and demand for it. But unlike gold, Bitcoin is more resistant to inflation because its hard cap and pre-programmed supply are immune to fluctuations in price. For those worried about rapid economic slumps, Bitcoin is the only commodity that hasn't been directly impacted by macroeconomic factors. There is no income to cut, and there is no supply chains to discourage entry. External factors such as energy costs and supply chains can impact minor economics, but Bitcoin itself adjusts for changes in network maintenance. Bitcoin becomes cheaper to mine when miners shut down, which eventually makes the enterprise profitable again. Regardless of opinions on Bitcoin, it still makes sense to own an asset that is largely decoupled and apolitical from purely political portfolio theoretical point of view. One cannot simply print Bitcoin at will, much like the dollar, but Bitcoin does not have to carry the burden of large economic bailout. As soon as selling pressure ceases and expansive monetary policy and devaluation begin to take hold, Bitcoin as an anti-inflationary asset is a must for every portfolio for risk aversion in hard times like this. Hope you have enjoyed learning from this video report. If you did, please give this video a like and share it with your online followers. We will stay in touch and see you in the next video.